Yes, so it's a flat start on expected lines.
So 19,500 has gone on the Nifty.
Points lower on the Nifty, and we have the mid-cap index, which is absolutely flat but with some negative bias.
Spent a lot of the morning below the 19,500 mark, and now we've managed to climb above that level. So from the day's low, there has been a recovery of about 60 to 70 points on the Nifty.
Closing out on a high, pretty much the highest point for the Nifty, and what has been an absolutely dramatic recovery in the last one and a half hours.
Well, it was an incredible day of trade today. The market opened with a negative bias after consolidating for a few trading sessions, then hit the lower end of the band. There was support seen between 19,450 to 19,500 for the Nifty. The lows were very close to 19,450. From there on, there was this big turnaround, and towards the end, it moved all the way up to the 20-day moving average of the Nifty, which was 19,645 itself, closing at the highest point in today's trading session. So it, on the same day, moved from the lower end of the band to the higher end of the band, and now the question is where it goes tomorrow because of the big macro cue, which is the RBI policy meet. You're watching us here on Markets Today, a show where we track 6 hours of day's trading action in 5 headlines. Let's talk about those headlines then. The sensex and the Nifty end in the green after a dramatic last hour recovery. The Nifty reclaimed 19,600. SIPs and mutual funds hit a record high of more than 15,000 crore rupees for the month of July. Coal India springs a big surprise on realizations, delivering far higher profits than expected in the first quarter. The spot perks up. Adani Enterprises considering the sale of its 44% stake in Adani Wilmar, according to Bloomberg report. The Adani family could retain a minority stake. Adani Wilmar shares decline in trade, and then we see a bit of a recovery in Adani end. Merger pain sinks despite reporting a good growth in the first quarter. Revenue grew about 10%, but a weak first quarter dragged Idea Forge, the management tells CNBC-TV18. But these results not comparable on a sequential basis due to the nature of business contract and timelines. Siemens also under pressure despite an inline set of numbers, whereas Trent rallies on the back of strong revenue growth. Metal names surged, index rallies over 2%. JSPL, Hindalco, JSW Steel, Tata Steel, all of them gain anywhere between 1 to 3% in trade today. This as global metal prices consolidate. Let's go straight to the day's trading action. Then it was a dramatic recovery indeed on D Street today. The last hour saw a big move on the way up, led by metals, IT, and some amelioration from the lows on the Nifty Bank as well, which was an otherwise underperformer today. ITC, Reliance, and M&M, all of them did extremely well on their part too. The Nifty reclaimed the 19,600 mark, and then we did see it close very close to the 20-day moving average. The Nifty Bank ended 0.25% in the red, with ICICI Bank being the biggest laggard. But remember, it did see a big recovery from the lows as well. We have Surabhi, who joins in with all the day's trading action. Surabhi.
Well, what a roller coaster Wednesday we've had, and it was capped off by a very slow start, a weak start, and then a dramatic recovery in the last 1 hour. The Nifty really spiking higher, and this largely thanks to perhaps expectations setting in, at least in the equity market, that the RBI will not sound too hawkish. Anyway, we're not expecting much change in rates, but perhaps the commentary will be a little on the dovish side. So the net result was the Nifty actually climbing back above the 19,600 mark after slipping below even 19,500 for the better part of the day. In fact, it closed just below the 20 DMA, so that was quite good. The Nifty Bank recovered above the 50 DMA, and some strength coming in that index as well. Commodity stocks saw a lot of gains, and it was very interesting to see the likes of Hindalco, Coal India, JSW Steel, even ONGC, all of these stocks moving higher. Some like Hindalco and Coal India, obviously on the back of numbers. Heavyweights lent a helping hand, so the bulls had Reliance, L&T, the likes of ITC to thank. In fact, other consumer stocks like Titan also kind of pitched in, so that was good going over there. The Bank Nifty, as I said, that recovery was really vital for the Nifty to be able to come back and close above 19,600. Mid-caps were a mixed bag. The index closed positive, but we had some very sharp result reactions coming in. On the way down, Dreamfolks really stands out. The stock completely collapsed as the numbers came in after 3 o'clock. Then you had Mishra, Dhatu and Idea Forge, again, weak numbers coming in. But the positive side, here's Bharat Forge, there was Trent, there was Aircon. These were some positive numbers that were reacting very well to their earnings. Well, in terms of the action from here on, the range is still intact and the bulls will be very happy with it. Tomorrow, if the RBI does not come out with any sort of a negative surprise, and perhaps the buy on dips will keep continuing in the market.
All right, buy on dips will keep continuing in the market. The Nifty Bank will be something that we'll be watching out for. But let's get in some market opinion as well. Ashwini Agarwal, who's the founder and partner of Demeter Advisors, is expecting a meaningful correction in the market. He also says that the pharma space is their single largest sectoral exposure right now.
If you think about the fundamentals, the earnings direction has kind of either kept pace or in some places fallen short of expectations, with valuations having become stretched and the earnings environment not delivering that many positive surprises. I would venture to think that we are in for a reasonable correction. Now, whether it will be a time correction or whether it will be a deeper one-step correction, only we'll find out. And it will be driven by an event that we can't forecast. It's the single largest exposure that I have in terms of a sector exposure. Gland Pharma, which is something that I own, hasn't done anything spectacular in the June quarter, but the expectations were so muted and so beaten down that the market's reaction to those numbers has been astounding. We must remember that, the stock had actually been offered to the public at 1,490 almost 3 years ago, went up to 4,000, came down to 1,000, which is a steep fall. So I think somewhere Pharma is a situation where earnings are fine, in line with expectations, slightly ahead, but I think the market sentiment was too beaten down.
All right, market sentiment indeed was beaten down. The stock Gland Pharma rallied almost 25% in the last 2 trading sessions itself, but still is a good 30% away from its earlier 52-week high. But let's talk about the other stock that was on our radar today. The other headline, Coal India, rallied over 1% on the back of an all-round beat coming in the first quarter. The company reported a profit of nearly 8,000 crore rupees. This versus expectations of 6,400 crores. Margins too came in much higher than street expectations. What caused that outperformance? Nigel joins in with the key numbers.
Well, that's right. Coal India's numbers were good. There was a top-down beat coming in there. And on the top line itself, it beat our estimates by around 900 to around 1,000 crores odd. The beat on the top line further flew down into the EBITDA, the margins, as well as the PAT performance. Well, let's run you through the key reasons then. The realization was much better. Blended realization came in much better than what Nuvama was working with. It was a beat of closer around 80 rupees approximately. And the FSA prices, that was a pleasant surprise in there because that jumped up by more than 6%. There were a couple of reasons out here. One was that the company took a price increase, point number one. Point number two is the mix has improved. They've sold a higher amount of coal to non-power sector, and that obviously gets a better realization. So that explains why the FSA realizations were good. The e-auction prices, well, they've come off substantially from the recent peak, but they're still at a premium of more than 140% in comparison to the FSA prices. The street likes that. Some on the street were estimating that the e-auction prices will come down to around 90 to around 100% as a percentage in a premium to FSA prices, which didn't happen. So blended realizations were a beat. But you'll say, how are the numbers good? On a year-to-year basis, still there was a margin compression. Well, the reason is that employee costs spiked up because they took a wage increase, but that is something that the street already factored in. You also had contractual expenditure that was up. All in all, these numbers looked quite good. Back to you.
Good, Nigel, and as a result of which a near 2% rally on that stock. But the other stock that rallied about 3%, despite reporting a mixed bag in the first quarter, where the profits met street expectations, but there was a miss coming in on margins and in terms of the EBITDA margins and the profits itself. Satish Pai, the managing director at Hindalco, said that the copper demand in India is strong, and that's why their copper EBITDA will improve going forward, and that led the stock higher today.
If the costs are coming down the way we said, we should be able to maintain that $700 per ton EBITDA levels that we delivered this quarter as well. I think that, look, the first thing we have to realize is that because the copper demand in India is extremely strong, because of the electrification drive, etc. So that is why to meet our customers' demand, we imported a lot of copper cathodes, converted it to rods. So I think going forward in Q2, you should see an EBITDA much better than in Q1, more near the 600s, because we are going to be using our own cathodes.
All right, Nigel, stay with us. Mishra, Dhatu, Nigam, Midhani, as we know, it slipped 7% at the back of the first week quarter.
Well, Midhani's numbers actually were a mixed set. The problem was that the stock was trading at a fresh 52-week high, so expectations obviously were quite high. Now, in terms of the numbers, the revenue growth was solid. It was up close to around 60%, so that told you execution is pretty much picking up steam. The problem is that margins compress, both on a year-on-year as well as on a quarter-to-quarter basis. The profit number as well, that came in up by close to around 5% odd. And the company says that they're sitting on a solid order book of close to around 1,400 crores. We spoke to the management and they said, for this year, a 20% revenue growth is pretty much on track. They're expecting margins to improve from year on because they got hit in the past quarter as raw material costs did spike up. But as per their calculations, they're expecting margins to go back to around 30% approximately. And they also said that there possibly be an OFS on the cards. We'll have to wait by to hear for that.
All right, Nigel, thanks a lot for that. The third headline for the day was Adani Wilmar. That's the stock which fell over 3% after a Bloomberg report that came in that Adani Enterprises, the promoters of Adani Wilmar, could sell stake in the company to free some cash up. So Bloomberg report, and I quote, is Adani explores stake sale in Adani Wilmar. Adani Ent is the holder of Adani Wilmar. Remember, as per the latest BSE shareholding, the company's promoters include Wilmar International, which holds stake of about 44% and Adani Ent, which holds a similar stake as well. As of the previous close on this stock, the market cap was close to around 2.8 lakh crores, and Adani Ent's holding, which is 44%, was worth close to around 1.3 lakh crores itself, 1.23 lakh crores. Now, the Bloomberg report says that the conglomerate is considering a potential sale of its 44% stake. It's been considering so for the last few months itself, and it could either be a full stake or a part stake itself, as Adani family may retain some stake in their personal capacity. The sale could free up cash for the group itself. CNBC-TV18 on its part did write to the Adani Group and refused to comment on this story. In fact, they wrote to the exchanges as well and offered no clarification in form of clarification regards this story. As a result of which, we saw a decline in Adani Wilmar on possible supply pressures, but Adani Ent was higher by 1%, hoping that there could be some cash coming into their books itself. But let's move on and let's talk about the big block deals on D Street today. Nimesh Shah has churned out some interesting details there. Nimesh, give us a roundup.
Even yesterday, there was a long list of blocks happening, and surprisingly, in most of the cases, the insiders or the private equity guys are selling out. The first stock is Minda Corp. Clean out trade. One of the private equity investor, PHI Capital, sold its entire 5% stake via block deal in terms of buyers. Society General was a big buyer there, along with ICICI Pru Mutual Fund. So that's on Minda Corp. Second stock was Ganesha Ecosphere. Again, in that stock, there was a clean out trade from a long-term investor. So MCap India Fund sold its entire 3.5% stake via block deal in terms of buyers. PNB Paribas Arbitrage was a big buyer in Ganesha Ecosphere yesterday. The third stock was 361, which is erstwhile IFL Wealth. Even there, the private equity investor General Atlantic sold close to 40 lakh shares, and they've raised close to 300 crores. Similar was the case with Balaji Foods, Bikaji Foods as well. The private equity investor Lighthouse, they have sold out close to 35 lakh shares at an average price of 480. And the big one was Inox Wind. The promoter entity sold close to 1.4 crore shares at an average price of 200 rupees. So, whole host of promoters and PE investors are looking to sell out into this rally, and yesterday was no different.
Indeed, thanks a lot for that, Nimesh. But the other big news that we got in the second half is that there have been consistent investments into our markets by retail investors. The systematic investment plans, or SIPs as we know it for the mutual funds, they've touched a record high of over 15,000 crores for the month of July. The total assets under management for the industry also rose to nearly 46 lakh crore rupees. Pavitra Parekh has culled out the data that came in from the mutual fund institutions and joins us to give us the key highlights. Pavitra.
Well, thanks a lot for that. Yes, the July mutual fund data just came out today, and the equity inflow number has come in at around 7,500 crores. Now, this is less than the number that we saw last month, that is in June. And I also want to point out that of the 7,500 crores, a big component, over 3,300 crores, is from just new fund offers. So do, keep your eye out on that, and that is important to take note of. If you look at the split between large, mid and small, money continues to rush out of large cap funds. The number is a little bit less than what we saw in June, so it's come in at around 1,900 crores, but it's still a very large number in terms of the outflow that we've seen from this category. Mid and small caps continue to do well, so the mid cap inflow number is at 1,623 crores, so looks quite good there. And the small caps also, it has come down a little bit, but it's still above 4,100 crores. So looking quite good, and the entire, excitement around the small cap space really continues. On the debt side, we've seen a big inflow this time of 0.61 lakh crores. This is is versus the outflow that we saw last month, and this is in large part because of what we've seen on liquid funds. So liquid fund inflow came in at almost 52,000 crores. This is versus the outflow that we saw last month of around 28,000 crores. So big change there in the debt figures as well. On hybrid schemes, we've also seen a big inflow come through, over 12,000 crores. This is versus just around 4,500 crores that we had last time. So that is important to track. And the total AUM of the industry, that has also gone up significantly. So that is currently sitting at 46.37 lakh crores. So that is also expanded, of course. And the big positive that I'm going to end with is that the SIP interest is rock solid. SIP inflows have come in at a record high, over 15,000 crores for the first time. It's actually at 15,243 crores. So rock solid interest, in terms of what the SIP investors are doing there.
All right, rock solid indeed, Pavitra, and that keeps our markets afloat despite the FIS selling for the last 9 days in a row itself. Take a short break, come back, we'll tell you all about all the other headlines that we've been tracking today. Welcome back. You're watching us here on Markets Today. We did speak about the dramatic recovery in the markets and a bunch of other stocks that were in focus today. But let's shift focus to the earnings corner then. Berger Paints ended lower in today's trading session. The dying minutes of trade today, around 325, was where the numbers came by. Those were a good performance that the companies reported, as a result of which we saw a bit of a smidge on the way up, but it was too late for the street to react to it. I'll be watching out for this stock in tomorrow's trading session itself. There was good revenue growth and sharp gross margin expansion as well. The company reported a high double-digit volume growth, close to 13.7% total volume growth, and they did say that they saw healthy growth across both urban and rural. The EBITDA and net profit grew by 38 to 40% respectively. So the gross margins expanding by about 410 basis points, the EBITDA jumping by 37.5%, the net profit coming all the way up to 335 crores. This compares, 355 crores. This compares with 254 odd crores itself. Decorative registered volume growth in the mid-teens and double-digit value growth. The management did say that with normal monsoons ahead and an extended festive season, they are gearing up for exciting times. See some green on the stock in tomorrow's trading session once the street digests these numbers. So that's about Berger Paints. Let's move on and talk about drone maker Idea Forge Technologies. Dropped 6% after reporting a weak first quarter. The net profit declined 54% on a year-on-year basis. And Siemens too was under pressure, even though their quarterly numbers were largely in line. Brokerages have put out their outlook on the stock. Vivek Iyer joins in with the details on both these stocks. Vivek.
Well, we're talking about two important stocks. Number one, Siemens, as well as, Idea Forge. First, when you're talking about Siemens India, like we highlighted earlier today, what's actually happened is that while, the Q1 numbers were largely in line with what the street was anticipating, and even when you're talking about order inflows, continuing about the 5,000 crore run rate that the company has managed to maintain over the last 3 quarters. However, what has been a bit of a disappointment, number one, has been the fact that the EBITDA margin has come in below what the street was anticipating. Along with that, a lot of brokerages at this point of time, especially Kotak Institutional Equities, what they are saying is that given the fact that the company now trades at very punchy valuations, at this point of time, it does appear as though a lot has already been baked into the stock price, which is why they continue to maintain a sell stance on the stock, and that explains the kind of move that you're seeing in the stock. When you're talking about Idea Forge, like we mentioned, earlier as well, it's actually been a significantly weak quarter on the company. On a year-on-year basis, margins have depleted quite significantly, and on the back of that, today you're seeing quite a bit of a significant sell-off as far as Idea Forge is concerned as well.
All right, Vivek, thanks a lot for that. Trent is the other stock that I'm watching out for. In fact, it rallied almost 5% in trade today on the back of their first quarter results. Now, remember, Trent over the last few years was known as the company that operated West Side. But now, in just the last 18 or 24 months or so, the focus has been moving towards Zudio, which is India's value retailer, and the swift growth or pace at which Zudio stores are increasing as well. As a result of which, the revenues of the company grew to around, 2628 crores. That's a 46% jump year over year. And a large part of that is on account of the expansion that the company has been on in Zudio itself. But what you see out there is the gross margins coming down from closer to 46% to around 43%, because the share of Zudio in their overall revenue increases. As that happens, the gross margins come down because of the value proposition of Zudio itself. As a result of which, despite a 46% jump in their revenues, the EBITDA of the company grew by only 26%. I say only in perspective of the 46% revenue growth, but no problems when it came to the bottom line. 166 crores versus 115 crores, that's a jump of 45%. And it also had an element of, added income, other income at 52 crores versus 44 crores. But all things said and done, stellar revenue growth, decentish EBITDA growth, and good profit growth. That means the stock was higher by 5%. We will await some more details coming in on their same-store sales growth. But with that, we're moving towards the last, but not the least most important headline of the day today. We have metal names. They surged, specifically in the second half of trade today. The index surged about 2%, but names like JSPL, Hindalco, Tata Steel, JSW Steel, all of them gained anywhere between 1 to 3%. This as global metal prices consolidated from the recent sell-off that we saw. So maybe a bit of a bottom fishing taking place in global commodity prices as well. Steel prices, remember, traded at a 2-month low. Copper was near a month low mark as well. Manisha Gupta joins in with the snapshot. Manisha.
Well, yes, it was a better day in a week, perhaps, for the metal prices, which were trading in the positive today. There has been some consolidation after the recent sell-off that we've seen. The decline comes in on the back of weak China trade data. It has been a double-digit percentage decline for the month of July on a year-on-year basis, whether it has been about Chinese exports or imports as well, which fell by 12.5%. The other thing is the China PPI inflation numbers that came in today, which was down by 0.3%, and that has been a decline for the first time in 2 years. So deflation really is what it is being called as in China. So we have seen weaker numbers coming in from the major producer and consumer of metals in the world there. And then add to that the fact that the US dollar has been on a stronger side. We've seen concerns of another US rate hike, all of that weighing onto the market. So you have the steel prices, which were trading near to its 2-month lows, iron ore prices at a 1-month lows, copper prices nearly at a month lows as well. And we have seen copper prices decline by 2.5% within this week itself. But the point being that while we are looking at weaker numbers, and for China as well, the imports of copper saw a decline by nearly 2.7% for the month of July. The overall Shanghai, China inventories for copper have seen a decline by 15% in the previous week. So the markets do believe that the sell clearly has been done with. And from here on, it is going to be about China's stimulus measure, especially focused into the real estate sector that the street will watch out for. It also is going to be about the US Fed official statements, which would continue most part of this week. And then the US inflation numbers, which come in on Thursday and Friday, the consumer inflation and the producer price inflation as well. And that would set further direction for prices. But not too many people at these current levels would advise selling in case of metals. It's consolidating, or even some strength is what they're anticipating.
Take that point, Manisha. Thanks a lot for that. With that, we wrap up on this edition of Markets Today. That was 6 hours of daily trading action in just 20 minutes for you. Thank you for watching. Stay tuned to CNBC-TV18 as news and updates continue.